Hello everyone, it's Wednesday, July 23. Today we're taking a closer look at the euro and British pound charts to evaluate potential market moves. On Tuesday, the euro extended its bullish run amid a light macroeconomic calendar. The rally was supported by growing expectations that the European Central Bank will hold interest rates steady at its policy meeting scheduled for tomorrow. Adding to the positive sentiment was the unexpected news of trade deals signed by US President Donald Trump with Indonesia and Japan, which boosted demand for risky assets and helped extend the bullish momentum. At this point, the European Union remains the only major US trading partner without a finalizing deal. Obviously, efforts are now intensifying to reach an agreement before the August 1 deadline. Turning to today's macroeconomic calendar, the euro area offers little in the way of significant data, with the exception of flash consumer confidence data. The indicator is projected to hold steady at -15 in July, slightly improved from -15.3 in June. However, the release is unlikely to have a strong impact on market sentiment. While the euro's upward trajectory is expected to persist, the bullish momentum could lose steam at least until the European Central Bank provides clearer policy direction at tomorrow's meeting. After all, the euro has been staging a steady recovery since July 17. As for US data, existing home sales are on the radar, but the release carries limited market weight. As such, no major moves are expected in response. Now let's move on to technical analysis. On the 1-hour EUR USD chart, a false breakout at 1.1718 would serve as a buy signal, potentially pushing the euro towards 1755. A successful breakout and consolidation above its level could open the way for further gains towards 1787 with an extended move up to 1825. At this level, I would recommend going short on the rebound in anticipation of a 30-35 pip move. Short entries at 1755 and 1787 should be considered in a case of a false breakout. This scenario is possible if upside momentum weakens ahead of ECB meeting. The initial downside target would be 1.1718. A break below this support level could trigger a deeper pullback towards 1683 and possibly 1660. At the 1.1660 level, it would be wise to go long on a rebound, aiming for an intraday correction of 25-20 pips. Long positions at 1683 and 1718 would be only relevant if a false breakout occurs at those levels. Speaking of the British pound, the chart indicates that the bearish trend that began in early July has been broken, and buyers are steadily building long positions. This could trigger a stronger bullish wave in the near term, particularly given the absence of key macroeconomic releases. A pullback followed by a false breakout at 1.3507 would serve as a buy signal, likely sending the pound higher towards 1.3546. A breakout and firm hold above this level could open the path to 1.3583 with an extended target at 36.15. Around 1.3615, short positions on a rebound would be reasonable, aiming for an intraday correction of 25-30 pips. Short entries at 1.3546 and 35.83 should be considered on a false breakout. In this scenario, sellers would aim to retest 35.07. A break below this support level would push the British currency down toward 34.69 and potentially 1.3436. At this level, long positions on rebound would be justified, targeting a 30-35 pip move. Long entries at 34.69 and 35.07 should be considered if a false breakout occurs. Good luck out there!